Hi, I'm Devin Shute, Head of Investments at the Rebay Group. So in this video, I'm going to take you through a high-level view of the global economy and where it is at the moment, and then look at the key factors that I believe are driving it. I'll then narrow the focus and look at South Africa specifically and unpack the current state of our economy and the financial markets. So looking at the global economy, there are two key factors influencing events: Trump as well as US Treasuries. So Trump's picked a fight with China regarding trade, and he feels they're being unfairly done by there. As a result, what's happened is we've had global trade slow as the two biggest trading partners have stood off against each other. This has meant that we've seen a slowdown in global growth. Then looking at treasuries or the bond market in the US Federal Reserve, they've started to lower rates as they're worried about the slowdown in the economy and they are trying to counter it. What we have also seen is that other central banks, including South Africa, have also responded by cutting rates in response to this potential growth slowdown. Now, as a result of these factors, policy uncertainty is at its highest level in 2 decades. And if you look at the chart I'm putting up now, you'll see just how elevated those levels are. And what this has meant is it has reduced investment activity. This reduced investment activity caused global growth to slow and the financial markets to be volatile. Turning to South Africa, a couple factors that are really affecting what's going on locally. We've got state capture, we were in a low growth environment, and we have our own policy uncertainty. So I don't need to tell you guys how the damage over the last 10 years has been wrought on state-owned enterprises, with Eskom being of a particular importance and their 450 billion rand debt burden. Now what we are looking to do is start that corruption cleanup, but it is messy and it is going to take a long time. Structurally, we've got issues. So we're in a low growth environment and that has caused unemployment to be at unsustainably high levels. And we are really looking for reforms to start to get growth going. And then unfortunately, self-induced problems is policy certainty, with real political hot potatoes coming in the form of national health insurance, expropriation without compensation, as well as prescribed assets. So if you throw all of these into it, state capture, low growth, policy uncertainty, the result is you've got businesses and individuals with confidence at record lows and financial markets that have underperformed over the last 5 years. The positive aspect of this is that we're about as low as we can go, and that it won't take much positive interventions to move investment and ultimately growth higher. What we need to do this though is to introduce clear policy reforms, especially with regard to Eskom and public finances. This should also help us avoid the much anticipated credit ratings downgrade. But I would also say that we mustn't lose sight of the progress we have made under the Ramaphosa administration, firstly to stop the rot and then to start the recovery process. So if you just look at the slide I'm putting up now, you'll see a few key areas of action that has already been taken that we might forget about. So cast your mind back to the dubious ministers we had in cabinet, as well as some of the boards of the real beleaguered state-owned enterprises. Those have all been removed. We have 3 revealing commissions of inquiry going on or being completed, and our prosecuting authorities have been given new teeth, and we expect next year to be the year of prosecutions. So in summary, globally and in South Africa, the politics is noisy and the economics can be messy. However, circumstances are probably not as bad as they feel, particularly in South Africa. And so while the risks remain, opportunities for business and investments both locally and globally exist. Thanks for watching. Have a good one.